Hi guys, and welcome back to this channel, Pips and Profit. And in this video, we're going to be showing you candlestick chart patterns you should take advantage of. All right, candlestick patterns for every forex beginner, even for intermediate beginners, and how to take advantage of it. This video is part of a series titled Forex Trading for Every Beginner, and we hope to take everyone from the beginner level to an intermediate level and soon to become a professional. All right, so we're hopping straight into the video. Now, an introduction to candlestick patterns. Candlestick patterns are quite a powerful tool for technical analysis, and they provide valuable insights to the market sentiment. All right, so we use this as patterns to know when things are about to happen in the market, things like reversals, things like retracement, things like continuation. All right, we use the candlestick patterns to know. So in this video, we're urging traders to pay attention to candlestick patterns, especially the ones we're going to be teaching you in this video. All right, so that you can use it to make informed decisions. So here are a few examples of candlestick patterns, and from this video I've selected the best candlestick patterns you should be paying attention to. There are a whole lot of candlestick patterns in the market, a whole lot. But in this video I've navigated it to the ones that you're going to be needing. All right, now the first one, doji candle. The doji candle, it signifies an indecision in the market, and it occurs when the opening price and the closing price are close, or they are creating almost a non-existent body. All right, I've already explained what opening price and closing price is, and then you can go back to the previous videos and check out the video titled types of charts. It's going to be in the description of this video. So when you watch it, you're going to understand what it means when we say opening and closing price. All right. And in this chart pattern, when we talk looking at the candlestick pattern, this doji chart pattern, we use it to signify reversals in the market. Okay, we use it to signify reversals in the market, and we just don't use it in isolation. We use it together with other types of candles. All right, now this is the doji candle, the one right here at the center is the doji candle, the one where you see that the open price and the closing price is quite close to each other. That is the doji candle. We don't just use it in isolation. Using it with these other two candles is going to give you quite some level of insight. Now, in this particular chart pattern, we notice that price has been making its way all the way up, and then we saw a doji candle, and following a doji candle is a strong sell candle to the downside. And another thing you should notice is that this strong sell candle is almost equal in size with the last bullish candle before the doji candle. All right. Now, as you can see that it's quite equal in size, it means that there is selling pressure entering into the market. Now, at this point, there was a decision of a buy in the market. At this midpoint, there is an indecision in the market. And finally, after the indecision, the new decision that was made was for price to go downwards. So we can use this for entry as entry patterns where you can enter your trade right at the close of this third candle and start selling. All right. So if you've seen a buy trend, all right, and then you see this doji pattern in a higher time frame, all right, say the H4 or the daily time frame, it could signify the beginning of a reversal or the beginning of a retracement. All right. In subsequent videos, we're going to tell you the difference between reversals and retracement. But for doji pattern, we use it to signify reversals or retracement. Okay. Or we use it to signify continuation. For instance, this could be a sell trend, and all these buys are retracements in the sell trend. At this part, at this junction, we're going to know that there is a sign of a continuation of the sell trend. So we'll be looking to enter our sell right here. Okay, so if we've been selling and then there is a retracement to the upside, at the close of this third candle, we'll be ready to sell. So these three candles joined together is called the evening star pattern. Okay, the evening star pattern. I don't know why they gave it that name, but this is what it is. All right, so we use it to signify the beginning of a reversal of a buy movement. Okay, so when there is a buy movement, this could be a reversal, or when there is a sell movement, and this could be the end of the retracement. Okay, so for buy movement, it could be a reversal, it could be a retracement. For sell trends, this could be the end of the buy retracement, because for a retracement to happen on the sell, price has to move upwards. Okay, now on this other side, we also use the doji candle. You can see the doji candle right here. Now, this candlestick pattern is not used in isolation also. We combine two other candlestick pattern. Now, you can notice that price has been selling all the way down, and on getting to this place, there is an indecision candle, which is the doji candle. And after the indecision, there is now a new decision for price to start moving upwards. So this could be a sell trend, and this doji candle could signify the end of the sell trend and the beginning of a buy trend. Okay, this could also be a sell trend, and this doji candle and this morning star pattern is going to signify the beginning of a retracement. And thirdly, this could be a buy trend, and this whole sell is only a retracement, and this pattern is showing us a continuation of the buy trend. So this is how we use the candlestick pattern called the doji. We don't use it in isolation. We use it in the evening star pattern or in the morning star pattern. Okay, so the next one is called the hammer or the hanging man. All right, now, this is signified by a candle that has a small body and a long wick. A small body and a long wick. Okay. Now, we use it to signify reversals or continuation also. Now, when you see it in this pattern, it could be signifying the end of a sell movement, the end of a sell movement and the beginning of a buy movement. Because price tried to buy in the first instance, there was buying pressure to the upside, but the sellers won the battle. And after the sellers won the battle, it has shown a sign that buyers are ready to get into the market, and then it could continue going upwards. Okay, that's for this first instance. For this second instance, the sellers continue selling the market, and then there was a rejection, a sell rejection. The sellers tried to sell, and the buyers rejected the sell and continued buy. Remember, the market is a battle between buyers and sellers. Whoever wins takes the trend. All right. So for this hanging man or the hammer, we use it to signify indication of reversals in a prevailing trend. When there is a trend to the downside and you see something like this or like this, it could signify that price is reversing to the upside. How similarly, when you see a buy trend and then you see a hammer, this is called a hammer, this is called the hanging man. When you see it like this, then it could indicate a sell. When you see any of these two in a buy trend, it is signifying the beginning of a change of trend to the downside. All right. So that is this particular chart pattern. The next one is the engulfing candle. Now, for the engulfing candle, we need to see a candle that is going in the opposite side and it's bigger than the previous candle going in the other side. Now, in this case, we have bullish and bearish engulfing candle. For context, the bullish candle is when we see a buy candle that engulfs a sell candle, a buy candles that engulfs the immediate sell candle before it. Now, in this case, the buy candles are the whites, the sell candles are the sells, are the blacks, right? Now, this is the sell candle, and we see that this buy candle went and closed right above this sell candle. When the buy candle closed above the sell candle, this is an engulfing pattern. You can see that this buy candle, which is the white, has engulfed this sell. This could be a sign of a change in direction in the market. So that means the market wants to go up. It could be a reversal, it could be a retracement. Okay, it could be a continuation. All right, same thing for a bearish engulfing candle. When we have a bearish candle, which is signified in black, and a bullish candle signified in white, when we have a bearish candle engulfing a bullish candle, closing below it, and is bigger than it in size and in distance cover, that is in the highs and the lows, this is a bearish engulfing candle. These two patterns can be entry patterns. It could also be patterns to show us a reversal, a retracement, or a confirmation. For entry patterns, we enter at the close of the high, that is for a bullish engulfing candle, at the close of the candle for a bullish engulfing, and also at the close of the candle for a bearish engulfing, right here where the arrow is pointing. Okay, so that is that for that particular pattern. The next pattern is the double top and the double bottom. All right, So when price has hit a resistance level, in the previous video we talked about support and resistance, so you know what the resistance is and what the support is. Sorry about that. When price has hit a resistance level more than once, or when price has reacted to a resistance level on a second occasion, it's called a double top. All right, when we have two tops at the same level, that is called a double top. And what we expect from a double top is for price to sell. This double top has created a resistance. And remember, in the support and resistance video, we talked about how that a resistance is a price point that sends price further downwards, where price gets to and starts selling off from. Okay, so we see this that when price arrives at this resistance level, it starts dropping down. These two regions are called the double top. Okay, so when it's two peaks in price that arrives in the same price levels, is signaling a reversal, just like we have here. And now for double bottom, we have two bottoms that are reacting in the same level, or price is reacting to a particular price point for a second time. It created a double bottom. When we have equal lows in two chart points, we call that a double bottom, and that signifies a reversal. So in this support area, it is signifying a reversal to the upside. Okay, so take note of this chart pattern. We use it to enter trades. We use it to know when reversals are taking place or when retracements are taking place, especially for reversal. In this case, we use it for a reversal. All right, and we take advantage of it for entry. Okay, and now the last one is called the head and shoulders. This pattern is very important for every trader to know. All right, mind you, these charts that you're seeing here are gotten from Pips, are gotten from babypips.com. All right, so all these charts are gotten from babypips.com. So you can go through that to study extensively on any of these chart patterns. But for you to take advantage of it, this is all you're going to be needing from this video. All right, this is all you're going to be needing. What this video gives you is going to be enough for you to be able to navigate through candlestick patterns. Now, for head and shoulders, you know your head is always higher than your shoulders, your two shoulders, the left and the right shoulder. All right, so for in many cases, it signifies a reversal pattern. It signifies a reversal pattern. Now you can see this. This is the first shoulder, and then price comes and sweeps this, goes above this first shoulder, and now to break above it. After breaking above it, you can notice that price went below this low. This is very important. Price went below and broke structure to the downside. We've talked about break of structure in previous video. Price went below and broke structure to the downside. After breaking structure to the downside, price revisited this left shoulder, creating a right shoulder around here. All right. When you draw this line, you see that they are almost equal in this in height. All right. When price does this, we'll be expecting a reversal to the downside. So this is for a sell setup, and this is for a buy setup. Okay. So you can notice the first shoulder, price goes and clears it, and the head is lower than the first shoulder. This is an inverted head and shoulder. We use this for the buy and this for the sell. Now, upon reaching to this place, upon getting to this place, price revisited the left shoulder after price has gone above and taken out this high. On this revisit to the left shoulder, price is now willing to resume to the upside. Okay, so this is the head and shoulder pattern. This is for a sell scenario. This is for a buy scenario. You can pause this video and take screenshot of this to be able to take advantage of it when you see it play out in the market. So these candlestick patterns are the ones that I studied over time and done my research on, and are the ones that I believe are going to help you to become profitable when using candlestick patterns. Okay, so this will be the end of the video. If you've not subscribed, make sure you subscribe to this channel and share this video with your friends who want to become forex traders. All right, if you have any questions, as usual, you can ask in the comment section and we'll be well to answer your question. Until we meet again, I wish you good luck and good trading. Cheers and God bless, guys.